Bags. Hey gang, I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough illustration of how to properly create a statement for retained earnings. So if you're new to the statement of retained earnings, don't fret gang, I dropped the link to get you up to speed in no time. So with that being said, let's get it. So it tells us Dalton Hairstylist, adjusted trial balance, and income statement follow. Prepare the statement of retained earnings for the year. Okay, so let's see what we have here. We have an adjusted trial balance. All right. And we have income statement as well. All right, yada, yada, yada. And enter any increases in retained earnings prior to the total. Yada, 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 blah, blah, blah. Okay, gang, so a quick recap on the statement for retained earnings. The statement for retained earnings happens to be the actual second financial statement that must be created. Remember, the financial statements are created in a particular order because information is being transferred from one statement to another. Each one of these financial statements will unlock a power or potential about the company that can reveal you to make better decisions about what the company is doing. So in terms of the statement for retained earnings, it basically summarizes the effect of your retained earnings account for that particular period. Remember gang, retained earnings happens to be a stockholder's equity account, and it's simply the income that is being retained for the company in order to help them either grow or operate. Now, because retained earnings happens to be an account for stockholders' equity, there are other accounts that happen to affect it. Remember, income is measured in accounting by taking revenues minus expenses. Therefore, any revenues or expenses, i.e. net loss or net income for the period that has happened, will affect retained earnings. Net income will increase retained earnings, and net losses will decrease retained earnings. Now, there's another account that affects retained earnings as well, and we know that to be dividends. By definition, dividends is income distributed from the company to the shareholders. And because it's a part of the income that retained earnings that has happened to be generated from the company, when it's given to the shareholders, the actual owners of the company, it decreases the retained earnings balance. And so that's basically what we're reporting for this period on the statement of retained earnings. Those particular items that have affected it. So let's look at this particular problem. Now, this company started this year, but how do we know that? Let's look. If we look at our adjusted trial balance, gang, let's take a look at this adjusted trial balance. We have a couple of accounts. Now, the order of the adjusted trial balance happens to be the accounting equation. So it's always going to list your assets first, then your liabilities, then stockholders' equity. Now, stockholders' equity, two accounts. As of now, common stock and retained earnings. After you list those two accounts, you're then listing the accounts that affect retained earnings, which we already know: revenues, expenses, and dividends. So, in terms of our assets, the cash, accounts receivable, office supplies, equipment, and accumulated depreciation, all of those accounts will be on the balance sheet. In terms of our liabilities, which we know last names are payables, accounts payables, interest payables, note payables, all of those are on the balance sheet as well. Then we have our stockholders' equity accounts. Now, we only see on this particular trial balance that there's common stock. There's no retained earnings account. So you know what that tells us, gang? That tells us that this particular company just started this period. Why? Because there's no retained earnings being generated from the beginning balance. So we know based on that our retained earnings for January 1st has to be zero, gang, because we didn't have any amount on the adjusted trial balance. Next, we have to look at the things that affect retained earnings. And so what we're going to do is take a look at the income statement, gang, because we know net income or net loss from the income statement must be transferred to the statement for retained earnings. And as we can see, we have a net income of $4,550, which is a good thing for the company. And so we're going to transfer that, i.e. increase our retained earnings balance by that net income amount. And so that'll give us a total of the same amount. And then if we go back to the adjusted trial balance, we realize that there is a dividends that was given for the period of $1,400. And as we know, that dividends must be decreased from our retained earnings for the period. And our new ending balance for our retained earnings as of December 31st, gang, must be $3,150. So we're going to check the answer. Bags all day. So there you have it, gang. One of the easiest statements to master. And now that you know it, you are just that much closer to chasing the bag with accounting. As always, gang, it's my humble pleasure for you guys to share your time with me. And if that light bulb clicked, please smash the like button, subscribe to the channel, and share with your friends so they can chase the bag as well. As always, I'm Dr. Who, and I'll see you soon. Bags!